There's another company that we're tracking here as well, pre-market, and they've just reported earnings, transportation earnings in focus, starting with Union Pacific. Those shares, they're moving lower by about 3.6%, just ahead of the bell. The railroad company actually topped expectations on the top and bottom line for the third quarter. A lot to really dive into here, but they'd actually seen for their truckload 3.7% year-over-year increase in revenue within that business. You look at their LTL business, they also saw some improvements there year-over-year, and I think in the logistics segment where they're actually seeing even more of that demand, that's going to be interesting to hear about where the company is being able to navigate some of the logistics headwinds and headaches that we've seen and heard from the likes of UPS and FedEx previously, but of course on the delivery front for UNP and Union Pacific, where they operate on the freight side and on the rail side as well.
Yeah, honestly, the decline in the shares is a little bit confusing here because it looks like that the company beat on a lot of different metrics, right, including operating revenue higher, total carloads up 3%, and the company's adjusted operating ratio. Now, the operating ratio is something that is very important for the railroads. Basically, they've adopted cost discipline, Union Pacific among them, and the adjusted operating ratio at 59.9% exceeding estimates. The company also said its forecast for the full year is now around 60%. It had been around 58%. All of those would seem to be good news, but stock is not getting that message.
Yeah, I'll have to ask some of those questions to Lance Fritz. Lance Fritz, CEO of UNP, in the I believe he's coming up in the 11 o'clock hour.